Hi, everyone. This is Jeff Praissman with Interactive Brokers Podcast, and it's my pleasure to welcome back to the podcast studio Scott Bauer from Prosper Trading Academy. Hey, Scott, how are you?
Jeff, all is well here in Chicago. How about you?
It's all good here in Connecticut as well. And I
Yeah.
love these Wednesday mornings when you come over to the studio and we talk a little market activity. And for our listeners, even before we get started, to get more from Scott, you can just go to prospertrading.com or find many great articles and podcasts on our website, IBKR.com, and click on education. So, Scott, last week stocks hit a record high. They're led by tech and AI names. How sustainable is this rally given, rising inflation and higher yields?
I mean, it's been pretty incredible. And, the buy into these tech stocks has been really aggressive. However, it looks like the broader macro backdrop might be, a bit more restrictive. We're looking at the Fed raising rates potentially later in the year. And, that divergence is really kind of honing in that maybe the equity rally is becoming increasingly dependent on just too few stocks and not as broad as we saw it maybe even just a month ago.
And one thing I did find interesting that, retail sales came in pretty solid, but it's kind of conflicting, right? At least mentally, because there's been some rising delinquencies and obviously inflation pressures remain. I mean, everyone knows how expensive everything is right now. What do you think this says about the, real health of the consumer?
I mean, the consumer is so resilient. And so far, it seems like all the higher, gas pump prices that we're all paying, maybe it hasn't hit some of the data just yet, but we are seeing this K economy. We are seeing it diverge even more so. And if you look at some of the retail sales data, it's some of those more expensive items like furniture and home furnishing, store sales, which were down, fairly considerably. Cars were down. So even though overall spending is there, it's kind of at that, that top line there. Consumers are really focused on more of their recurring expenses, things that they need to spend on right now. So even though the resiliency is there, I think it's starting to wane a little bit.
Got it. And, Kevin Warsh was confirmed as the Fed chair. And, kind of, officially signaling like sort of more of a restrictive stance. Like, how should investors think about rate cuts or even, hikes from here?
Yeah, and, we have to follow the bond market. And even Warsh, as much as he would like to lower rates, contends that's really not possible right now. So we'll get to the minutes later today, and it's really going to say how hawkish the entire FOMC maybe has become. So I think, he's in a really difficult spot because his, goal mandate in general is to get rates lowered, and that's not going to happen anytime soon.
And as always, we have so much data coming out in a couple of weeks. What should markets watch for with the upcoming FOMC minutes and Fed speeches? And you think there's any sign of policy divergence or concerns about inflation?
Well, I think the concerns are still there, and maybe they have even gotten a bit deeper. And I think we'll hear that in the minutes, that it's not maybe just, sticky anymore, but it is really an issue. So in these minutes, as we just discussed, I would expect the focus really to be on how far, to the hawkish side, maybe the entire committee has been. And then we'll get, as you said, a bunch of Fed speakers afterwards. But to me, the focus really is going to be, are they looking to hike rates this year, early next year? When is that going to be?
And finally, with PMI and jobless claims due, could these data points shift expectations around growth in the Fed's next move?
There's no question about that, because especially PMI, which is the Flash Purchasing Managers Index, that's data that covers not just here in the US, but Eurozone, UK, Japan, Australia. We get that from S&P Global. So we're going to get with those numbers a really timely read on the overall global economy. And even though maybe consumers here aren't feeling it or aren't feeling the higher prices at the gas pump just yet, is that really hitting in other parts of the world? That and how are higher rates really hitting people. So I think this is a good one because this is not just isolating here in the US, it's really global.
Scott, as always, this has been great. For our listeners, it's Scott Bauer from Prosper Trading Academy. Comes in every other Wednesday and gives us a rundown of the past week of the market and the week ahead. Thanks, Scott. Looking forward to next time we see you.
Thanks a lot, Jeff.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.